Hi, everyone. Welcome to the Path to Profit podcast. If you join me for the first time, my name is Bobby. And as I do every single week, I'm breaking down everything that went in the overall market to get you ready to trade for next week. So without further ado, it's time for the rapid review. All right. As always, timestamps down in the description if you want to jump around. Make sure you stay tuned to the very end where I give my 0 through 10 rating on the market so you know exactly where I think this market's going. But let's get started with current state of the market. Market direction, we're in a confirmed uptrend still. 8 days in that uptrend. And we had our first distribution day in this uptrend on Thursday. NASDAQ gained a distribution day. And if you look over at the distribution day tracker, there you see it on the 5th, down on volume. So as always, we're going to be keeping track of these distribution days, looking for clustering to see if we see some selling coming into the market, but still a little early. One distribution day so far. Not much more to say about that. Looking at the moving averages, you can see we are still green on all moving averages as we were last week. Very, very positive there. But nothing really much. I mean, we're pretty close to the 10-day, pretty close to, the 21 day. I think right now it's just a matter of seeing if we can hold above all these levels because we've only been above there for a very short period of time. For the week, you have the S&P down 0.10%, NASDAQ down 1.10%, the Dow up 6.3% leading the week, and the S&P up 6.92%, NASDAQ up 15.49%, and the Dow up 1.02%. So let's jump over to thinkorswim and let's take a look at the charts and see what went on this week. All right. Looking at the NASDAQ, let's zoom in so you take a better look. You can see NASDAQ was down for the week. It was just a slight pullback. We looked like we were going to possibly close down below the 10-day moving average, but we actually did rally back up and get above it. So we did close above all the moving averages as you just saw. Really, to summarize what went on this week is we kind of just pulled back as we approached this key level that we've been talking about, but we didn't really break any significant level. So not very, very concerning. As you can see, once again, we tried to get above this level, pulled back. Nothing, I would say, alarming of that. Ideally, we would have liked to have just ripped through it. But I think given how we rallied up pretty quickly to kind of pause right before that level, pull back slightly, nothing alarming. The question is, can we remain above some of these moving averages? Can we hold above these key levels to continue higher? Or if we start to break down through some of these moving averages, and specifically below the rally day, then obviously things are not looking good and below the 200. So right now, I think we're just in that kind of sideways action, seeing are we going to be able to break that next level. There you have the weekly. Again, this big downtrend and what's been an attempt to go higher over the past couple months. Look at the S&P. Not much different on the S&P. Similar, getting up to those levels, not as close, pulling back. They did not have any distribution gained on the S&P, but it did have a little bit of volume that came in on Thursday, very similar, but did not count as a distribution day. And there you have the weekly there as well. So, to really, truly summarize what's going on with the indexes right now, it's just a matter of a wait and see game. Are we going to break higher, or are we going to kind of maybe fall back and go back down lower? Is this really going to be a really true sticking point in terms of resistance? So we'll see what happens going into next week. All right. Industry groups, talking top 10, bottom 10 weekly performers, biggest jumps and falls rankings. Then we're going through all the top 20 industry groups. And in the top 10, we'll be looking at some possible stocks that are in basis or breaking out. All right, top 10 weekly performers. You can see those on the screen. Big thing that I would say to jump out is the gold, silver, and gems. A lot of people have noticed the gold ETF was breaking out of a base. You can see, and we'll see later in the top 10, that mining, definitely a very, very strong group. The other thing that I noticed this week, though, is the utilities. It's just oil and gas, kind of sliding into more of those, I guess you would say, the defensive type of groups popping up this week, but not a consistent week after week thing we're seeing yet. So it's just something to take a note of. Bottom 10 weekly performers. Nothing really I want to add here. That's really it. Biggest weekly rank jumps, utility, we just kind of saw that. And biggest weekly rank falls. Nothing really to add on that. So again, we're going to look at these every single week. We're going to try to see if we see any trends. This is kind of one of the things that showed us that the semiconductors and the tech was starting to really perform well. These past couple of weeks, just haven't seen anything in the last, I'd say, 2 weeks that is jumping out at me. So still something to pay attention to, but nothing important as of this week. 20 through 11 up on the screen. You can see a lot of rotation starting to occur. That is the one thing I will say. And I think we probably going to have more rotation occurring when we go through the top 10. You'll see why I think that. But computer software making its jump into the top 20. Both desktop, design, finance, all jumping up there. Other than that, you can see just a lot of rotation. Aerospace and defense made a pretty big jump, 30 to 16. So lots of rotation going on. But let's get into the top 10. We'll jump over to MarketSmith, and let's get started with number 10, which is, get down there, cosmetic personal care. Number 26 last week. This week, number 10. A lot of people, I think, have noticed ELF. ELF was a company that a lot of people were paying attention to. I did own that and make a little bit of profit on that before we did kind of pull back. But this is a group that was kind of popping up on my list, I'd say, consistently for a couple of weeks. So no surprise to finally see it back into the top 10. And in terms of stocks, there you have it. Top 3 are extended. Procter & Gamble, the only one in a base. All right, we'll go to number 9. Electronic semiconductor equipment. All right, so this one was looking really nice. Made its way all the way up to the top 4. And then now it's dropped down to number 9. Broke below its moving average. You can see just kind of pulling back. Volume, not crazy besides Thursday. But just breaking below all those moving averages, the 10 to 21, the 50, not a good sign. So it'll be interesting to see what happens. It did not break below the low right here, as you can see, but still that downward action, not good, as you see the RS line kind of making a turn for the downside. In terms of stocks, they have them on the screen and one actionable. All right, number 8, big jump. This is what we were talking about, mining gold and silver, jumping from 29 to 8. Pushing through all its moving averages. RS line just trending higher. Breaking out of this cup pattern, very similar to the actual gold ETF, which actually, let's see if we can bring that up. You can see that cup with handle kind of breakout that had. But yeah, getting back to this one, this is definitely looking strong and has been looking strong. A lot of names in this group. And they have the ones that meet the criteria and the few actionable ones as well. I personally do own the gold ETF, considering the strength that I saw in this group, both from the industry group, the stocks, and also from the ETF actually breaking out. So sometimes when you see a group like this, if it's a very broad-based move, if you don't know who the exact leader is, or you're just not sure how to pick the actual stock that you want to buy in this group to go with that trend, there's nothing wrong with actually buying an ETF that emulates an industry group, which is exactly what I did. But this group is definitely showing a lot of strength. So I would say if you're buying stocks in here or ETFs that are related to this, definitely making a good move. But remember, it can go in either way very quickly. So always have a plan on the up and the downside. All right. Number 7, Pure Software Education and Media, going up from 10 to 7. Not an explosive move, but moving up nonetheless. Spotify, which I'm a big fan of, is in this group. Duolingo, haven't messed around with that app, but it's definitely a very, very popular app. So yeah, we'll see. Let's look at Spotify real quick. Looking very similar to how Spotify is acting, but which has performed well this year. So yeah, other than that, nothing really much else to say. And Duolingo one stock in that group. All right, 6. We have wholesale electronics, very, very small group. Not going to waste much time here. Not much to be said. A couple names to talk about, though, right there. That's what you got on that one. Number 5, telecommunications, cable, satellite, and equipment. This one's been jumping up and down. It was higher up in the rankings. It dropped down, and it dropped back up. So you can see the kind of little more choppy sideways action that it's had in the past little bit. But the RS line is trending down. So I'll be curious to see if this continues to fall down, even though it jumped up this week. And they have a couple stocks in there. Computer hardware peripherals. This is your Dell, your HP, Logitech, Supermicro Computer, which is a CANSLIM type stock, growth stock that was performed going well for a short period of time that I think a lot of us might have purchased in this group. Yeah, flat to choppy action though on this one for sure, but still worth keeping an eye on. And no stocks in that group. Number 3, electronic semiconductor fabless, the group that we've all been talking about for a while now. This one just continued to kind of move sideways as I think the market is trying to figure out what's going on. RS line trending down. Not a good sign, but the group itself holding up. A lot of names. Here are the ones that meet the criteria, as well as some 3 actionable or in-base stocks. 2, let's just skip this one. We talk about this every week. Super small group, only 3 names. I don't think it's worth paying attention to. So we'll run over that one. And number 1, leisure, travel, and booking. We've been talking about this one every single week. Booking.com, Airbnb, Trip.com. Stocks groups been performing well. Not surprised to see it jump into the top spot, considering how the market's been acting. And they have 2 stocks in there as well, both of them in basis / actionable. So yeah, that's where we're at in terms of industry groups. I think given what's going on in the market, there's a lot of stuff that needs to kind of shake its way out. Industry groups got to figure itself out. Index has got to figure itself out. I'll get more into that. But right now at the industry groups, just keep an eye on it. And make sure you're focusing on the ones that seem to be showing strength. Just because they're in the top 10 doesn't necessarily mean it's worth investing in those industry groups. It could have been a number 1 at one point and now at a number 10 and clearly about to drop out of the top 10 to even top 20. So that's why I like going through these and making sure that we're going into the stronger of the top 10 and the ones that are probably going to stay up or move higher. All right. Earnings. Nothing really to show there on earnings, just a few names, but earnings season will be picking up soon. So now it's time for the stance on the market, 0 through 10 rating on the market. There's the scale. So, all right, last week I was at a 6.4 as we jumped up and turned green on the market indicator that we were in a confirmed uptrend. So this week, we are going to be sitting at a 6.3. Very, 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 very minor adjustment. I dropped 1 point. Main reason just being it would have been better to see us rip through those key levels that we keep talking about every single week. And this week we didn't. We just kind of pulled up and pulled back. We gained a distribution day. Do I think it's anything bad? Do I think it's anything alarming? Absolutely not. But this, I think to summarize this, and I kind of started saying it before, this is a patient market. Patient with the industry groups shaking themselves out. Patient with the indexes, seeing if we can break higher. Patient with some stocks that are going sideways, choppy, and maybe right on the edge of breaking out. Nothing definitive has happened in this market as of recently. And I think it's important to not be caught flat-footed if the market does turn around. But it's also very important not to just start diving into this market because we're in a confirmed uptrend and you think this could be the next big market, and it might not be. So Patience is key in moments like this. Continue to do the work. Continue to be staying in sync with the industry groups, stocks, the indexes, so that when things do start perking up, you're fully prepared. You've been doing the work, so you have the confidence to make the right moves, and you'll be able to capitalize on all the hard work you've put in waiting for this market to really, truly show some strength. One thing I will say is if you feel the urge to rush into the market, just understand if this market is going to go up, if this market is going to be a long-term successful uptrend, people are going to make money, there's going to be plenty of time to get into it. It's going to be one of those things where you miss a stock that breaks out. Yeah, maybe you miss a really good one, but there's probably another really good one right behind it. So just be patient. It's the most important thing. In times like this, you do not want to get chopped up with a death by 1,000 type of cuts thing where you're buying, getting stopped out, buying, getting stopped out, buying, getting stopped out. And then when the market does turn around, you hemorrhaged a lot of capital to just sideways choppy action. So yeah, a little bit shorter of a one this week just because of how the market's acting. But yeah, we'll see what happens next week. Maybe we'll bring a little bit more promising news. So we got subscribe, turn notifications. Always do this every single week. And we got some stuff that you guys might like. If you made it this far, I'm sure you're going to like one of those videos. So that's all we got. See you guys next week. Stay disciplined.